Welcome back to Bunnex Investment Group. In this video, we are going to simplify how to count levels. I've come across so many comments actually stating out that it's very difficult to mark levels, and some other subscribers actually think it's not an efficient way of finding trading opportunities. So in this video, we are going to just focus on counting levels on the H1 time frame and show you how you may be able to simplify counting these particular levels. So in this case, I'm going to define a level as a day of drop or a day of rise. In this case, we can see that we have this particular two lines, these black traces. So a level is something that will require us to see start of price, or the lowest point of the day is actually lower than the highest point of the day, and the following level will be defined as something that will break the high of the previous level, like that. And this all will be done on H1 time frame. So we all know that after 3 levels of rise or 3 levels of drop, we expect to see a reversal, and in that case we would want to see a double bottom or a double top, which we can simply call an M or a W. So let's start at this point. It was 21st of September 2022, and we are going to count levels on the H1 time frame in a simplified way. So we have this point as our reference. We have the first day of drop, right? The following day, price highest point was this one, or the high of day was this one, and its lowest was this one. But a pullback was now seen to be at this point, and the last impulse actually went to that point. So if you are now experienced, or if you've counted levels for a very long period of time, you'd see that you may be able to do it without the help of indicators. So this was the second level, right, or the second day of drop, and we had the third level. So at level 3, we need to see the first leg being issued, then we need to see a second leg, preferably on the following day from the first leg. So we had 1, 2, 3, and as I've said earlier, when 3 levels are issued, we expect to see a reversal, and it will be best if we see a double bottom or a double top. In this case, the first leg was issued, the market went up and created the second leg, and on the second leg we would want to see a candlestick reversal pattern for us to enter on the second leg. Therefore, our entry was going to be made around these points, because that is where we can see a candlestick reversal pattern from this zone down to that point, a confirmed candlestick reversal pattern. So that was the first cycle. Then counting again using the same manner, we can see that we had a day of rise. As we can see that the low of this day was this, and the high of day was this. Then the second day of rise, which made it past the high of the previous day, we could see that we had this, right, as our second level. Then the next thing, we can see that the highest point of this impulse was at this point. Therefore, on this particular day, can we say that there was a level? It wasn't a level. Why? Because the market was actually a pullback. Then on this particular day, was it a level? It did not break the high of the previous level as it did at this point. Therefore, we can term this a consolidation phase. Then the break of this particular price was done on this day. Therefore, we had the last level that was issued at this point. After 3 levels of rise or 3 levels of drop, I've said we expect to see a reversal, and a double bottom or a double top would be actually the best. We had the first leg that was issued on the third level, and then we were expecting to see the second leg on the preferably on the following day. We had this point where we had a candlestick reversal pattern. Although the market went back up, this actually happens in the market. We call it stop hunting, whereby the market makers are there to actually grab out liquidity above these zones. So you could actually get stopped out and re-enter, but you could catch your pips at this point. Then the next thing, we can see that from this point going up, there were no levels, enough levels to anticipate a reversal. Then after that, we can see again the first day of drop was issued, second day of drop was issued. We were expecting to see the third day of drop. So using the criteria that I'm explaining in this particular video, there was no entry at this point, right? Because the cycle did not complete. Then after that, we can see that we had another level, right? It was now in the upside. First day of rise, right? As I have defined earlier, a level is a day of rise on the H1 time frame. We had level 1, level 2, and then we had level 3, like that. After 3 levels of rise, we expect a reversal, and in this case, the reversal was issued. However, this was now a variation of the theme. We call this particular setup a head and shoulders pattern, where we had a shoulder, head, and a shoulder, right? This now requires some more techniques to actually locate that this particular setup is going to be issued, and market went our way, right? Then the next thing, we had 1, 2, and 3. What happened at this point? Someone would say we were going to lose, but we had first day of drop, second day of drop, third day of drop. We were expecting to see a reversal pattern at this point, right? Where we had the first leg, and then on the second leg, did we get any candlestick reversal pattern to show us that the market is going to reject? No. And the market went past our point that we expected it to reverse. So in conclusion, what I've been actually talking about is to simplify how you can count levels. A level on the H1 time frame is equivalent to a day of rise or a day of drop. However, there are some other criteria that you need to actually apply this properly. There is what we call the resets, where we need to actually satisfy higher time frame levels. Resets are there in the cycles, and you require them. You need to actually learn the war concept, and we also teach that in our advanced course. You may actually see more using the link that I've left in the description box below in our free Telegram channel, where we share setups of currencies almost every day. On that note, we come to the end of this video. Thank you for watching. Like and subscribe.